Hello everyone and welcome to this bootcamp where I'm gonna teach you one of the strategies that I have been using for 10 years, and only in the past 3 years it helped me generate over $5 million with 831 trades. If you would like to see my profit and loss statement, the link is in the description. So let's get straight to the point. Hello everyone and welcome to this video where I would like, for example, if we have a head and shoulders pattern which indicates a bearish move, then we understand that millions of people that are trading patterns are going to take a short trade. So what we are gonna do, we are gonna look for a opportunity to buy against them. So we're gonna look for hidden bullish signals to buy against the sellers that are gonna sell on the average retail patterns like head and shoulders. But in the case of the harmonic patterns, this pattern actually work quite consistently. The only problem is that it is very complex and people don't really know how to use it, or they use it wrong because of the Fibonacci sequence. So in this video I'm gonna show you how we're gonna use it. One of the things that you need to understand about this pattern is that it actually works on every single market. I'm trading on almost everything, if it's stocks, forex, crypto, anything really. I prefer to trade more on forex because I basically have daily trades there, but this pattern really works on anything. And in this video, I'm going to show you examples of this in different markets, for example, in crypto markets, in stocks, and also in forex. Okay, so we have 4 bullish harmonic patterns and 4 bearish harmonic patterns. And one of the things on how to spot if they are bullish or bearish, we need to know on how they are formed. So it goes like this. Let's start with the very first one. It's a movement, 4 movements: X to A to B, B to C, and C to D. This is the very first pattern. Okay, so we have the first movement, X to A, the second, A to B, the third, B to C, and the fourth, C to D. And according to the text and the theory behind the harmonic patterns, once the pattern is completed, we must anticipate a bullish move, either a pullback up. So once we have the C to D leg finished, we need to search for a bullish signal. Okay, the pattern formation itself is not the signal itself. It only says, okay, listen, we may have a bullish move. Now, from what price do we actually enter? This is different, but we're gonna touch that in this topic, in this video. Okay, so the second pattern goes like this: X to A to B, B to C, and C to D. Okay, so it looks like this. And the only difference between the second one and the first one is that in case of the second one, A is not equal to C and X is not equal to D. In the first case, A is equal to C, which means a double top. If we draw a line like this, okay, it looks like a double top, and X is equal to D, which means a double bottom. In the second case, in the second example, the market created, while it formed this bullish harmonic pattern, it created a lower high and a lower low, because C is lower than A and D is lower than X, which means a lower low and a lower high. And it really doesn't really matter, because we will also learn in the future videos on how we can spot that C is gonna be lower than A or higher than A, and D is gonna be equal to X, lower than X, or higher than X, by using, of course, supply and demand and different kinds of interesting indicators. Okay, and then we have the third pattern. Okay, the third pattern looks like this: X to A to B, B to C, and C to D. Well, it's kind of similar to the second one. In the second one, we had a lower high, while in the third one, we had a higher high. In the second one, we had a lower low because D is lower than X. In the third one, we had a higher low because D is higher than X. Okay, and the very last pattern goes like this: X to A to B, B to C, and C to D. In this case, it created one lower high and one higher low. On the second pattern right here, it created a lower low and a lower high. Okay, in this case, the last case, it created a lower high and a higher low. Okay, so those are the four patterns for bullish movement. Now let's speak about the four patterns that are for sellers. Okay, that gives us a short signal or a short opportunity that we can anticipate once the pattern is formed. So it goes like this, only vice versa. For example, we have X to A to B, B to C, and C to D. Now let me just change the color of this pattern to red, so we will know that it symbolizes a bearish movement after it's finished. Okay, so just like the bullish pattern, we have the same thing when D is equal to X and A is equal to C. The second one is X to A to B, B to C, and C to D. D is lower than X, which means a lower high, and C is lower than A, which means a lower low. The third one is X to A to B, B to C, and C to D. It created a higher high between X and D, and a higher low between A and C. And the very last one, it's the same, only vice versa. X to A to B, B to C, and C to D. Created one lower high and one higher low. So now let's give them names. So for example, in the classical, so now let's give those pattern names so we will know how to identify, because in the future we need to learn on how we can know that the D, for example, is going to be lower than X or higher than X, if the C is going to be higher than A or lower than A. So according to the classical theory of harmonic patterns, they have a variety of different names. For example, shark pattern, butterfly pattern, the Gartley pattern. But for us, it doesn't really matter, because all of those names are built for the Fibonacci sequence, because to the classical harmonic pattern traders, they are using them with Fibonacci. For example, they are placing Fibonacci on X and A, then B has to touch, for example, a certain number of the Fibonacci, and if it doesn't touch it, then the name of the pattern changes, for example. In our case, we only have two names. It's going to be called the M pattern and the W pattern. And why is that? Well, because the bullish pattern, it looks like an M. You know, an M when you write in English or when you read a book with the letter M. And the bearish harmonic pattern, we're gonna call it the W pattern from now on. Just like you write W or you read W. So now, every time that we have a W pattern, and it doesn't matter if the D is higher than the X or lower than the X, if the C is higher than A or lower than A, if it looks like a W, it doesn't have to be perfect when D is equal to A or A is equal to C. If we have something that looks like a W, we need to anticipate a bearish move. If we have something that looks like an M pattern, we need to anticipate a bullish move. Alright, so now let's speak about what is considered a valid pattern and what we should look for, and what is considered a bad pattern that we should not consider it. Okay, so let's take the bullish harmonic pattern for now. So for a bullish harmonic pattern and also the bearish harmonic pattern, we really need to look at the B. The first thing is B. So now the B, as you can see right here, it needs to be somewhere in the middle of A and X. For example, it cannot be higher than A, and B cannot be lower than X. It has to be somewhere in the middle. It can be near A or near X, but it cannot be lower. Now, when it's lower, in this case, as you can see, it turns into a reversal head and shoulder pattern. Okay, so this is one of the things that we need to look for when we are trading or we spotted a harmonic pattern. Now, regarding the C can be higher than A, it can be lower than A, but it cannot be lower than B. In this case, the pattern is too crooked and it's not valid. Okay, it can be also equal to A. Regarding the D can be equal to X, it can be lower than X, and it can be also higher than X. Okay, but one thing that it cannot be higher than B. For example, the B can be right here. It cannot be higher than B. It has to be lower than B. Okay, equal to X or lower than X. Okay, so this is exactly what you see here. You can see that can be lower than A, it can be higher than A, and D can be lower than X and higher than X or equal to X. The same exact thing with the bearish harmonic pattern. B has to be somewhere in the middle. It can be closer to X or closer to A or in the middle. D has to be either equal to X, either lower than X or higher than X. Okay? And C can be equal to A, lower than A, or higher than A, but it cannot be higher than B, and D cannot be lower than B. Alright, so now that you know how to spot and identify a harmonic pattern, let's find a couple on the chart. Now we're gonna look at some examples on the stock market, the forex market, and the crypto market. Okay, so as of right now, I am looking on Tesla 1 hour time frame, and I see a very interesting thing right here. So I see that we have a harmonic bullish pattern, X to A to B, B to C, and C to D. Okay, let me just change the color real quick. Okay, so we have a harmonic bullish pattern. As you can see, B, it's in the middle between X and A. C, it's higher than A. It can be higher than A. It can also be lower than A, but it cannot be lower than B. And D looks like it's equal to X, which means that it's a double bottom. Okay, so we have a bullish harmonic pattern right here. Okay, and what happened after that? It went up. It went up very good. But now, if you look closely between A and C, let me just draw that with a rectangle right here between A and C, and also delete the bullish harmonic pattern that we spotted. Now, in between A and C of the bullish harmonic pattern, we also have a bearish harmonic pattern, X to A to B, B to C, and C to D. Okay, let me just change the color real quick. So in this case, what happened is that we had a harmonic pattern inside of a harmonic pattern. In other words, you can have a M pattern after an M pattern, which M pattern means bullish if you remember. we can have an M pattern after a W pattern, and we can have a M pattern inside of an M pattern, and also a M pattern inside of a W pattern. In this case, we have a W pattern inside of a bigger M pattern. In that case, it means that we had two opportunities, one to sell and one to buy. So this is what's interesting about this pattern. Okay, now let's continue with the examples. Alright, so I am still on the Tesla 1 hour time frame, and I found a very interesting example. In this example, we're gonna look on how you can get a sequence of the same pattern, giving you a multiple signals to enter the market and open a couple of trades. So we're looking on Tesla, and I'm gonna start drawing. Well, as you can see, we have the first M pattern that starts here, X to A to B to C, and C to D. Gonna change the color to blue. Then we have the second one. What happened after an M pattern, which means a bullish pattern? It means that we will anticipate a long move or a pullback. Okay, so in this case we got a move up because we are on the 1 hour time frame. The second pattern started where the finish of the first one finished. So right here, X to A to B to C, and C to D. So we have the second M pattern. As you can see, B can be between A and X, C can be higher than A, and D can be lower than X. C cannot be lower than B, and D cannot be higher than B. So if you notice, when the second pattern starts, the X, it's actually the D of the previous pattern, which is very interesting. The same case with the third pattern. Right here, the second bullish pattern finished, created the D movement. And then we start X to A to B to C, and C to D. And we got three trades, one after another. This is the beauty about this pattern. Alright, so we moved on to the Forex market. I'm looking on Euro USD 1 hour time frame, and I have found a very interesting example that I would like to share with you for you to become much better at spotting market manipulations. Okay, so I'm gonna draw the pattern. It's a W pattern. If you remember correctly, W pattern indicates a bearish movement. So we have X to A to B, and B to C, and C to D. Okay, I'm gonna change the color. So now I have a question for you, and write it in the comments if you know the answers. We have a bearish harmonic pattern that indicates a bearish movement after it will finish its formation. Now the question is why it continued going up. Okay, pause this video and write it in the comments. Meanwhile, I'm going to explain to you why it happened. Alright, so for me to explain to you why manipulations like this occurs, we need to understand the maximums and minimums, the trend lines and the pullbacks. So for example, let's draw a trend line up. Okay, this is a trend line up, and we have a maximum. The maximum can be either a change in the commitments of traders report, or maybe a supply area on a higher time frame, or a bearish divergence, or a change in sentiment. It can be different things and everything together. So let's say that we have a movement up, a bullish trend line, and we have a maximum. Now, you need to understand that the best patterns are the patterns that are forming in their own market. For example, a bullish harmonic pattern will be a higher probability trade if it's formed in a bullish trend. So when you see a M pattern, you need to see if the trend is bullish or the trend is bearish, because a M pattern, it's a signal to take a bullish trade, but if the trend it's bearish, then it's probably a manipulation to get you on the wrong side of the market. So remember, let me also draw a bearish line. So remember, a M pattern, we are only gonna look when the market is rising, okay? And a bearish pattern, we are only gonna look for when the market is in a decline, okay? Because if the market is falling and then you get a W pattern, which indicates a bearish move, then you have a higher probability to actually take or enter actually the bearish movement. One thing to notice, I didn't draw the maximum by mistake. I wanted to talk with you about the maximum because it is very important. Now, let's say the market reached its maximum because of the demand or the sentiment. We already spoke about this. Now, let's say that on the maximum, we get a M pattern, a bullish harmonic pattern. Would you take this trade? Pause this video for 5 minutes and answer in the comments. Now, I'm going to explain to you why you should not take this trade. Well, because the market reached a area that it's so expensive that it's not worth continue buying it. So now in that area you get a bullish signal, which is basically a manipulation to get you to buy the instrument more expensive. So we're only going to buy the harmonic pattern if it's an uptrend or if the market is at a minimum. So we draw the maximum. Let me just also draw the minimum. This is the minimum. So we're only gonna buy the M pattern on the minimum like this, and we are going to sell the W pattern when it's on the maximum, because when the price is expensive you want to search for selling opportunities. For in this example, if we spotted a harmonic bearish pattern, a W pattern, then it's good if we spotted it either already in a downtrend or when the market created or reached the maximum. Okay, the same thing with the bullish harmonic pattern, which is a M pattern. If you remember, we're either gonna take it if it's in a bullish trend, or when once it reached the minimum, because when the market reached a minimum, the price is so cheap that it's not worth continue selling it. So we want a bullish signal. In this case, as you can see right here, a bullish harmonic pattern. So this is exactly the reason why on the minimum, we need to search for M patterns, for harmonic bullish patterns. As you can see, the market went down very aggressively, as a matter of fact. It reached a minimum because of the divergence and then created a harmonic bearish pattern. It created a bearish signal when the price was too cheap to continue on selling it. And that was a manipulation. So this way, you will know how the market makers are basically manipulating you through patterns, in this case, the harmonic patterns. I have found another very interesting example to show you. We are still on Euro USD 1 hour time frame, and as you can see, we have a bullish M pattern that was formed on the minimum. So the market went down very serious bearish trend, then it created a M pattern. Okay, so after that M pattern, as you can see, if we take the X from C, X to A to B, B to C, it started kind of creating a bearish pattern, but this bearish pattern was created after it already reached the minimum. So this M pattern gave us the ability to enter a bullish trade from the very minimum, and the W pattern, the bearish harmonic pattern, which is in red, made traders get into a short position and manipulated them. But if you know where to take the harmonic patterns, what kind of harmonic patterns you need to take at the minimum, what kind of harmonic patterns you need to take at the maximum, then you will not get manipulated by the market. Alright, so we moved to crypto because I would also like to show you a couple of examples on the crypto market. We're looking on Solana, Sol USDT, 1 hour time frame, and I really love the crypto market. The ability to trade and the liquidity is just amazing. So let me show you something very interesting. X to A to B, B to C, and C to D. We can place the C on the body of the candle or on the wick of the candle. It doesn't really matter because C can be higher than A, can be equal than A, or lower than A. It cannot be lower than B. So we got a M pattern, a harmonic bullish pattern. What happened after that? The market went up. Okay, no problem. The market went up. It's a harmonic bullish pattern, so it's good for us. Now, after that, if we continue anticipating and waiting for the best opportunities, you can see that the market started a pattern X to A to B, B to C, and C to D. Okay, so we have a bearish pattern, but inside that bearish pattern, we have a bullish M pattern. So as of right now, I just drew a W pattern, okay? But if we deleted it, and a W pattern basically indicates a move down, so that's why we got a aggressive, impulsive bearish move. Now, if we delete the W pattern, inside the W pattern, we have a M pattern, okay? So we will be able to buy this big bullish move up and then after that sell. Of course, in this video, in this bootcamp, I only wanted to show you what is harmonic pattern, how to avoid manipulations, but in the future videos we are gonna also talk about entries on how we can spot that the price will reverse from here and not lower than X, when the D will reverse higher than X, or the C will reverse lower than A or higher than A. Because really, if you know how to trade harmonic patterns, you will be able to spot 3 different trades in one single pattern. Okay, so as of right now, we only spoke on how to take one trade when the CD movement finishes, but as a matter of fact, we will be able to take 3 trades because we can identify a harmonic pattern before it even finishes. And all of that, we need only 3 simple moves, X to A and A to B. And because of that, we may use different strategies to try and identify that we have a potential B to C and then a potential C to D movement, which is basically a M or bullish harmonic pattern. So in this case, we will be able to buy the B and then sell the C and then buy again the D movement. Alright, my friends, thank you very much for staying until the end of this video. You can ask me any questions you want in the comments and I will make a video regarding your questions, because really I use a combination of different strategies. It's smart money, supply and demand, commitments of traders reports, a couple of indicators, divergence, sentiment. So I have 10 years of experience in the market and I will answer all of your questions either in the comments or I will make a video for it. So give me a like and subscribe to this channel if you found this helpful. See you next time.